What's up, guys? Jonathan. I want to walk you through an example of exactly how we trade. In the comments below, I want to hear feedback. Honestly, if this doesn't make sense to you, if you have a better way, please teach me, because this, to me, is the most straightforward way to approach the market. So let me get into it. We're going to be looking at micro spreads. They're cheap. The margin on these things is like $1,200. Here's how it works. So the blue line is going to be S&P, Russell. The red line is going to be NASDAQ, Russell. The green line, S&P, NAS. Okay? Straightforward. S&P Russell, NASDAQ Russell, S&P NAS. Now, let's say around this February 17th time period, okay, just as an example, we're not always going to buy the low, we're not always going to sell the high. I just want to walk you through. Let's say around February 17th, okay, and we're going to see, right around this time, even before, but using February 17th, if we were to buy the green line, if we buy the green line, we are buying S&P, selling NAS, okay? Because the green line, as we know, is the S&P NAS. So we're buying one S&P and we're selling one NAS. We could also, at the same exact time, either sell the blue line or sell the red line. Maybe the red line looks more expensive on this chart. Let's sell the red line. If we sell the red line, we sell the NAS and we buy the Russ. That's the entire position. If we look at it taken down to like the common denominator, the lowest common denominator, it would just be buying one S&P, it would be selling two NASDAQ, and then also buying one Russell, right? So we're selling two NAS, buying one Russell. So it's one. That's the entire position. So February 17th, if you wanted to put that trade on, you would just go buy one S&P, sell two NAS, buy one Russell. Now, this is called a butterfly. And it's called a butterfly. We refer to this as the belly of the butterfly, and these guys as the wings. So everything that we're doing, we look at relative to one another. I have a tough time just buying the S&P or selling the S&P based upon technical analysis. Like, I don't get it. It just doesn't make sense to me. Everything we want to do is relative to one another. Stay on, guys. I'm going to go through a bunch of examples. This in front of you, this is our Edge product. It's Edge Lite. This is a flash sale today. It's for $27. You also get a month of the options membership and a month of the futures membership. I want to make this a no-brainer. Stay on. Let me explain exactly how it works. Notice here, the P&Ls, we look at everything as a P&L. So if you were buying the green line, kind of right down here, it would be at the negative 800 mark. As it rallies, you can see exactly how much you'd be making and how much your risk is. So the column on the right will show you really what the opportunity is. If you sell the red at $1,200 up here and you buy it back at $800, you're making $400. Same thing if you sold the red here at 800 and you bought it here at whatever, at 1,000, you're losing $200. So the Edge tools will tell you exactly what you're risking. But let me keep pressing on with this trade. Opportunity, opportunity. Now, things started to get pretty wacky. And this is what really gave, one of the things that gave us the tell. The virus was really nothing in the US. It was only in China. But you see the relationships start to break down. Once the market and volatility picked up, these spreads came back in line. But let's keep going, because I want you to see all these different opportunities when you look at the market this way. Selling the red, buying the green. Anytime they break apart, you're waiting on the edges and then making a trade. Now, do these instruments need to be perfectly correlated? Absolutely not. But let's use this here. The blue line gets to a level never seen before. At the same time, the green line is going straight up. There's probably a trade there. What is that trade exactly? Well, May 20th, let's look at the blue and green line. So May 20th, now this is going to be easiest if you take notes as well. So you can go through the examples, so you can pause, you can go back, and keep an open mind. These are the micros. So again, the margin on these spreads is $1,000, $1,200. It's really not a big deal. It's a great way to learn. So let's look at May 20th. And let's say we want to buy the blue line. So let's buy the blue line. And at the same time, sell the green line. Now, I'm going through this specific example just because you can really see the blue line getting just murdered and the green line going in the complete opposite direction. So how would you put on that position? Well, the blue line would be the S&P against the Russell. So we would buy and sell. Okay, so if we go down here, we would buy one S&P, and in this example, we would sell one Russell. Sometimes we will use a ratio of 1 to 2 with the Russell, but for this example, I'm just using 1 to 1. The ratios, we teach how to figure out the ratios. So the Russell, I am charting one Russell. You always want to trade exactly what you're charting. You can't chart 1 by 2 and then trade 1 by 1. That doesn't work. So S&P, Russell, we're buying one and selling one. And then for the green line is going to be S&P against NQ. So the green line, we're going to sell. You're going to sell one S&P and buy one NASDAQ. This is cool. This is a good example. I'm glad we did this. Nice one. So blue, buying S&P, selling a Russell. The green, selling S&P, buying a NASDAQ. So if we sell an S&P, and now we got to add a NASDAQ, and we buy a NASDAQ, look what happens. These cancel out. Boom, boom, right? Because we're buying one and selling one. So don't even do the trade. Forget about it. All you're doing is, in order to express the opinion on May 20th of the blue line and green line getting away from each other, and that's why it's so important to do this on paper, first, make sure you understand it. Right, Mark? Mercury, what's over there? You good? He's good. Where were we? Russell, Nas. Russell, Nas, NASDAQ against Russell is just that red line. So what would we be doing? Well, so in order to express this opinion, we would have to get long the red line, right? Long NQ, short one Russell. This is the first one. And what does that red line do? Well, check it out there. The red line just, goes to the moon. But again, you could see pretty much if you got in at the $1,200 spot and you got out at the zero line, you make $1,200. Pretty good freaking trade. But again, you can see how the trade presents. And that's really the value of using the Edge Light tool. As we keep going, you can see the interaction of the different lines. But look what's happening right now. Right now, we want to be short the red line and long the green line. The trade is pressing us. It's starting to come in a little bit, but it's got a long way to go. So the trade right now